Hey all, Choiboy here. Welcome to another video. We got the Sharesies Portfolio update for February 2022. Not a nice number you see up in the screen, but before we get into that, hope you all are staying safe and well despite the increasing number of the Rona, and also with the whole war an invasion going on in Ukraine, also the worsening kind of situation with mortgage rates and economy. Hope you're all staying well despite all that. I hope the people of Ukraine are staying safe. Before we get into it, just a disclaimer, I'm not a financial advisor. Please take everything I say with a grain of salt. Do your own research before you buy or sell anything I talk about on this video. Just take my opinions and thoughts as reference for your research. Firstly, to kick it off, the value we have in Sharesies is $13,671. Now that is around $2,600 lower than what I have presented to you guys in the January Sharesies portfolio update. So that's a decent dip. It's been dipping for the past couple of months, right? So we've seen a high of around $19,000. It was about to go reach my kind of break even point, then it just dipped again with the whole economy and just the war as well. In a sense, it kind of negatively impacts the stock market for a wee while, then regain its losses after it settles down a bit. Not feeling too good with the number going down quite a lot, but the market is pretty hot nowadays, pretty volatile, so that's what you should be expecting. I know a lot of you guys would be losing money in the stock market as well. If you're doing dividend investing, you won't be as impacted because the most impacted stocks at this point in time with all the global events that are happening around us are growth stocks. Okay, so the total return is negative $7,000. okay, so that's quite a bit of a dip. That means I'm down around $7,062 from my kind of break even point, which is not great, but my unrealized gains increased a lot, mainly because Blackberry and Plexure has dipped quite a lot, which is not that great, but given the market, I'm not too worried about it because I'm not going to sell it anytime soon. So let's write it out and see how it goes. But yeah, unrealized gains just going up a lot in the negative side. The simple return is negative 25%. okay, so 25.9, pretty bad. I mean, it was already like in the negative 16% or so last month, so let's hope this is a bit short-lived and regain its losses in the near future, but nothing to worry about. I haven't put more money in, so it's the same values. I haven't been chucking money into this account for quite some time because I am building my cash position at this point in time for the property and all the kind of stuff that I'm thinking about other than stocks. So the portfolio is rather simple, nothing too much going on. It's pretty much the same, but you will see a new company called Mainfreight, which is a New Zealand supply chain and logistics company, pretty well known, probably the biggest one in New Zealand at this point in time, and I've bought it because it was the results of the voting from the pick a stock for Till Seven Figures episode 3. That was in the live stream last time, so if you haven't joined into that one, make sure you join the next one in maybe 2 months or 3, and I will put some notifications out and community posts and Instagram stories to kind of let you guys know. But other than that, pretty simple. Blackberry down 56%, which is not that much different from last time. It was down like around 50% anyway, so not much going on with this one. I think it's just a bit low, 6.715, so I think this is the lowest it's been since the peak last year in 2021. I'm hoping this is like where it settles down. I'm not too worried about it. It did dip a bit. I wouldn't mind putting more money into Blackberry in such a price because I think this is a bit lower than what it should be at. But also because Blackberry is pretty much a cybersecurity company which does IoT and all those kind of stuff as well, Cylance is going to be a really interesting point to look at, which is Blackberry's cybersecurity product company. Why is cybersecurity very important in a time like now? Because a war's crashing out in Ukraine, we got the economy falling. So there's a few things here you need to think about. When the economy is not that great, but we got a war going on as well, cyber attacks are going to be pretty common for the next couple of years. It's always been like that. It's always when the economy is not that great in general, there's a lot of attacks, cyber attacks. So, you know, these kind of companies build products for companies to protect their securities and protect their infrastructures and assets from cyber attacks using Blackberry's products. So there's going to be a lot of interesting things going on in Blackberry. Hopefully they do bounce back up. I do have high hopes for them, but I think $6.715 is just due to the market more than Blackberry itself. There hasn't been much going on with Blackberry other than that. So that's pretty much it. I do like their kind of stance on kind of paying down a bit of their debt over time. They're just trying to get through the hardest time of their lives at this point in time, where their revenue is quite low at this point in time compared to the past years, and also their earnings are still in negative. So we would like to see that kind of flip in the next year or two. So that's the only US company I have. Now we got Mainfreight, right? So it's a stock I bought because of the pick a stock for till 7 figures content I was running on my live stream last time. And just to look through it, it's $8 billion market cap. Their PE ratio is a bit high for what I would like. Honestly speaking, I would like to see low PE and PB ratios for companies that are in manufacturing or supply chain or like logistics, like, you know, those traditional companies that hold their values because of the infrastructure they have and, like, you know, assets and whatnot, compared to tech companies where a lot of their kind of assets are in the IP itself. So, you know, for these kind of companies where they have a lot of physical value, I would have wanted better kind of PB ratios especially, but that's not really the case. Their P ratio is a bit too high, which means that they're earning not enough to justify the market price of Mainfreight, which is sitting around $78 at the moment per share. So that's one thing I'm slightly concerned about, but also once again, it's for the content. It's not because I wanted to buy it, but nonetheless, it's a pretty good logistics company in general. I do believe in it in the long term, but in the short term, I thought it was a bit expensive in my opinion. Nonetheless, we got the revenues going up in an uptrend, which is really good. It's always good to see that, but there has been some supply chain kind of delays recently. So I want to see how that changes for the next report they will have sometime soon for the Q3 FY22. Some interesting things. So the equity is on an uptrend where the debt is getting paid down slowly, which is really good. It's always good to pay down your debt, especially when the interest rates are going up. When the interest rates are going up, that means mortgage rates will go up, but your savings and your term deposit interest rates would possibly go up as well, but also the interest on debt goes up as well. Depending on where you are financially as an individual or as a business, hiking interest rates might benefit you or not. So if you have a lot of debt in a time like now where the interest rates are going up and pretty high and inflation's pretty high, and they only increase interest rates to kind of battle against the inflation, you know, it's a really good move to see them kind of pay down their debt, which is really good. So let's keep an eye on Mainfreight. I won't be keeping it for too long, maybe a 2 month or 3 months, and I'll be changing it in the pick a stock for till 7 figures episode 4, which will be happening around in May or so. So keep your eyes out for that. So that was Mainfreight. So we got Rakon. Rakon, it's sitting at $1.71. It had a peak of around $2.20 or so, then it dipped quite a bit down to $1.62, then it has consolidated around the $1.70 kind of range. So lots to see here. Rakon has an update for us where the underlying EBITDA guidance has increased further from what they have increased in November. So in November, they increased it from 30 something to like 44 to 49 mil, as you can see here. You know, they increased it even further, okay, to 49 to 53, which is ahead of the guidance they have increased from the previous one. So they increased it like 2 or 3 times already. So that's a really good kind of look out for the company. I think it's heading towards the right way. They're doing really good, and they have a bunch of other things where they're battling how to kind of keep employees safe from the pandemic and the whole drama we have at the moment. But it's really nice to see that Rakon's doing really good and they're really taking care of the people there. So I'm looking forward to Rakon. It hasn't been dipping or anything like that. It's just been consolidating, so I'm not too worried about them. They have really good outlook for the next couple of years in my opinion. So that's Rakon. Finally, we got Plexure, okay? We got Plexure. So Plexure is a bit of a mess at the moment. It's at 34 cents. That's like the price it was maybe around 3 years ago or 4 years ago or so. So it's not that great to see Plexure go back down to these levels. It's been quite some time it's been down here. I think it like briefly touched around this area, you know, in the March 2020 kind of dip, but it quickly recovered, but it's been downhill since, you know, late 2020. So I'm hoping not to see 20-cent range. Like, honestly, that would be quite depressing, but I still do believe in the company. It's just that they had a lot of drama, as you would know. If you don't know about them, watch my previous Sharesies Portfolio updates. I talk about these dramas, which happened especially around the October 2021 kind of times. So have a look into that. But in general, they had a market update. Okay, so 25th of February, we can see on the Plexure site that they said the 20% plus group recurring revenue growth. That's really good. It's good to increase your recurring revenue. They did have a reduction of staff, which was a result from the recent restructure they had, and I think they removed all the non-engineering kind of people like sales and then business to kind of cut down their costs, and they reduced it by around 40%, which is a huge chunk. There has been some supply chain delays, as I mentioned in the Mainfreight one, and also impacting their hardware sales. And I guess why is Plexure worried about their hardware sales is probably because Task does a lot of their hardware kind of products, because Plexure doesn't have hardware products, but Task does. So I think with their POS systems, or I don't know, whatever they do with kiosks or whatever, and because of the uncertainty around the supply chain delays, they have removed their guidances. Okay, and as you can see here, yeah, withdrawing our revenue guidance today. And I don't know, like, honestly speaking, that's slightly concerning for me. I would have liked some kind of revenue guidance, but also I guess they didn't want to spit a number out or a range out and not deliver. So I don't know, like, I'm kind of half on this, but because I haven't seen many companies that just withdraw revenue guidances, it's not that common in general. But you know, yeah, I don't know how this is gonna go with most kind of investors, because we haven't seen any good updates since the whole merge. Like, there has been a lot of fallouts in investors because of the uncertainty, and they're giving us even more uncertainty by doing this, but hopefully that's for good reasons. I'm not sure what to expect at this point in time, but you know, I do see a lot of other kind of good news about it, with, you know, 20% growth in recurring revenue, as we mentioned, but you know, 25% growth on monthly SaaS revenue, so which is also good as well. It does seem like Plexure is definitely focusing on the business for Task rather than Plexure itself. That's how it looks like from the outside. I don't know. They always talk about Task platform, and you know, the hardware thing is also a Task thing. So they're focusing a lot of the spotlight towards Task, but not towards really Plexure. I don't see many things about the Plexure product. So I don't know, like, I'm slightly sad about it, mainly because I worked there before as well, but you know, hopefully they do get over it and they kind of expand on the Plexure product as well. I really want to see Plexure kind of succeed for, you know, half reasons. That's where I grew most of my career, so I have a bit more emotional kind of attachment to Plexure than any other company. But of course, if there's a point where I don't see any light in Plexure, I will be selling it. You just got to be cutthroat at times, but also I'm already down like 60% on Plexure. It's quite bad, but you know, it is what it is. You learn a lesson, you don't do it next time, hopefully, and that's how it goes. So at this time of announcement, Plexure Group has 13 million cash in the bank. So that's not that much, to be honest, because they had like good 40, 50, right? But they used the majority to fund for the merger and acquire task, which was more of like a reverse acquisition. But nonetheless, they don't have that much cash in the bank anymore, which people might have thought, if you haven't been following Plexure properly, yeah, the main reason of the drop of cash in the bank is because of the merger with Task. So that's pretty much it for the portfolio update. There's not much more to talk about other than the fact that I'm crying internally, but it's okay, we'll get through it, and I hope everyone else don't freak out because of the market, because it could be temporary, it might not be. But if you're dollar cost averaging, just keep doing what you're doing, and if you are looking at when to enter the market, just research properly and make sure you know what you're getting yourself into at a time like now in the stock market. So that's pretty much it for the portfolio update. And just one thing to mention, I think there's been a lot of fear in the market, especially for beginners, to see how the stock market reacts to wars. Now, I kind of read through a lot of these, including the one here in Fortune, as TLDR. It does dip a bit when the war breaks out sometimes, and it sometimes even goes up, but if it does go down, it does regain back its losses pretty soon after. So simply saying that wars don't really impact the stock market for the long term. It's a very short term thing, and people shouldn't be too worried about the war itself, but the combination of the pandemic, the falling economy, the high inflation, the interest rates going up, but also the invasion to Ukraine on top. So all these things, together at one point in time, right now, that's what you should be worried about. And that's where your research comes in, and for you to make good decisions. What should I do with my investments at a time like now where all these major events are still happening in the world at the same time? So that's the complexity of investing at a time like now. So just do your own research, please. Make some responsible, reasonable decisions. I decided to just not put more money into investments at this point in time, also to build my cash position for a possible first property in the next couple of years, 1 or 2 years. So hope you all don't freak out, and let me know how you guys are going with your investments down below in the comment section. If you like today's video, give it a thumbs up, put a comment down below of any other questions you have so far in the video or anything about personal finance or investments. If you haven't subscribed to the channel already, subscribe to the channel using the button below, bell notification for the next updates and live streams, and I will catch you in the next video or live stream. Until next time, I will catch you around. See ya!